Moving on to some other important news, US President Donald Trump has once again put Mexico and this time even the EU in the crosshairs, this time over fentanyl. Trump has threatened steep new tariffs if Mexico doesn't crack down on the flow of fentanyl into the United States. But this isn't just a border security issue. This is about trade, supply chains and markets. The threat of 60 to 70% tariffs on imports from Mexico and the EU could ripple across industries from autos to agriculture, raising costs for even American businesses and consumers. And Mexico is not the only recipient of the letters this time. Like we rightly said, EU's Ursula von der Leyen also received a letter imposing 30% tariffs on the 27-member bloc that is the US's largest trading partner. Just last week, we saw a dozen letters going out from US President Donald Trump. But let's also look at this against the angle of a presidential election looming. Tariffs have become a favorite lever of Trump's economic pressure. But if they are an effective tool or a blunt instrument that could trigger inflation and supply chain chaos is something that we're actually going to scratch the surface with a little bit with my guest, Marc Chandler, Managing Director of Bannockburn Capital Markets, joining us now. Good evening from India, Marc, and welcome to NDTV Profit. Let's cut to the chase. If the US were to impose 60 to 70% tariffs on Mexican imports, what's your sense of how the markets would react in the short term? Would you say this would turbocharge US inflation and force the Fed to stay hawkish even longer?
Well, that's a good point you raise. I think that we should really take these latest letters, like the last week's letters that you mentioned, as really negotiating ploys. You know, we first were told that April 2nd was Liberation Day, and then it was postponed until July 9th, and now it's really been postponed till August 1st. These letters are really meant to expedite the negotiations. Remember that the Trump team promised 90 deals in 90 days, and I think they got 2 or 3. So they're frustrated, I think, and that's why I think this is an attempt to accelerate the negotiations. But I think you're right. Those kind of tariffs, which are really double what they're proposing now, right? They're proposing 30% on the EU and Mexico, unless there's better negotiations cut first. But but double that tariff, I think you're right. The economic shock would not only impact the world, but would impact the U.S. But there again, be careful, I think, that the tariffs cut both ways. It boosts prices because the tax on consumers and U.S. buyers of those imports. But at the same time, those higher prices means weaker demand. And we've already seen the U.S. consumer pull back not only in Q1, but in the beginning of Q2.
All right. So Mexico is deeply woven into American manufacturing, right? And from autos to electronics. What could this tariff threat mean for cross-border supply chains, and which sectors are most exposed to this then?
Yes, you know, the U.S. has pursued this strategy of really continental integration until President Trump. And so we in the United States encourage businesses to locate production in Mexico, take advantage of various things, not just cheap labor, because a lot of the manufacturing is really capital intensive, not so much labor intensive. But in any event, we've established for the last 40 or 50 years this continental integration. And President Trump says it no longer works for the United States, even though the U.S. has never been richer than it is today. And so this is going to be a shock to Mexico, not only through the trade and the integration, but, you know, this whole idea of nearshoring and friendshoring, Trump is throwing it out the window with a reshoring focus. I suspect that if industrial production, manufacturing comes back to the U.S., it won't be with a lot of jobs. You look at the modern factory, it's robotic, it's automated. It's not about jobs and manufacturing. In fact, most of the world has lost manufacturing jobs over the last 20 years. So I'm concerned that the tariffs, such as they are, if they're not negotiated lower, will not only slow down the Mexican economy, will boost U.S. inflation. And I think you're right, the auto sector is really the key. And we're seeing this not just, of course, in Mexico, but the U.S. 25% tariffs on autos in general are really going to hit the Japanese economy as well. The auto sector is about 10% or so of the Japanese economy. So yeah, I think that this is a big shock to the world. But again, the market is taking it in stride because they think this is just a negotiation ploy rather than the final deal.
I think one can just hope that it's that and not more than a negotiating tactic. Because like you rightly said, America also stands to either lose or gain. But this saber rattling is already hitting US markets. Mark, the 30-year US Treasury yield spiked to a multi-month high as investors have obviously braced for higher inflation and prolonged rate pressures. If Trump does go ahead with a 60 to 70% tariff on Mexico and these new levies on Europe, what does that then do to the US consumer and the dollar? Could this trigger retaliation that really hits American exporters or further upend supply chains?
You raise an important question here, and that's about the escalation. So the U.S. Has slapped tariffs, and we saw this last week on Brazil, which Brazil has a trade deficit with the United States. The U.S. has a trade surplus with Brazil, and yet that didn't stop the U.S. from levying this tariff on Brazil. So it's not just about trade, but I think that we're seeing the U.S. economy slow down. Of course, the economy was distorted by people trying to run ahead of the tariffs in Q1, and that distortion is like in reverse in Q2. But I think that we're seeing signs of a slowdown as we enter Q3, and I think that this will still, though, the Federal Reserve is still not in a hurry to cut interest rates, despite the pressure from the White House. Partly, you do have, as you say, elevated inflation. Federal Reserve Chairman Powell has been very clear about this. He was explicit, telling Congress as well as the public that if it weren't for the tariffs, the Federal Reserve would be cutting rates again, probably. And so I think that you're looking at, the market having second thoughts now about whether the Fed can cut rates in September. It still has nearly 2 cuts discounted for this year. And the idea is that the slower economy, especially a slower labor market, will spill over, hurt the consumer, have them basically reduce their consumption by definition, and thereby lowering inflation and price pressures.
Mark, one last question before I let you go, and thank you so much for your time and really breaking this down for us so simply. You said it's a negotiating tactic, and some are even arguing that it's more about political optics ahead of the election than real policy. So from your vantage point, do you think these threats are credible? And should businesses start hedging seriously, or is this all just campaign posturing?
No, I think that to focus on the 2028 presidential campaign is still too far away. I don't think it's really the driving force. I think you might be able to make a more compelling case that this is going to shape, that this tariff debate is going to help shape the midterm elections next November. But we're still far away from that. I don't think this is political in the partisan sense of electoral campaigning. I think that we're finding that President Trump's economic policies are losing support among the various large constituency groups that made up his electoral victory. So I am concerned that it's not about the narrow politics, but the broader vision of America, America's role in the world economy. Are we really going to abdicate the institutions that we created after World War II, things like the World Trade Organization or its predecessor, the GATT? Are we really going to be undermining the IMF, the World Bank, the UN? Are we just going to go unilateral, which is, I think, a better way to characterize the U.S. thrust now, unilateralism, not isolationism?
Right. Marc Chandler, thank you so much for that perspective, and looking forward to discussing with you more. But for now, it's a wrap. And this is, let's remember, as US President Donald Trump has shot off 2 more letters, one to Mexico and the other to EU. We just gave you the details of all of the tariffs, and it remains to be seen the impact that we'll see on Monday with the markets. But that's a wrap on this edition of the broadcast. Thank you so much, and keep watching NDTV Profit.